Ladies and gentlemen, we are officially on the precipice, on the edge of the ledge of a major housing correction, if not a housing crash, right here in Southeast Florida. And today, specifically, we're looking at the Tri-County area of Miami-Dade, Broward, and Palm Beach counties so that you guys can get a macroscopic understanding of what's happening in the real estate industry there so you can make the best decision for yourself and your family. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami realtor. And if you guys like these kind of videos, do me a quick little favor. Go ahead and smash the like button, hit subscribe, ring the notification bell, do a triple axle, off the high dive, and then share this video with anybody who you think might be interested in this information. So today we're going to be looking at a bunch of different stuff, all the most important metrics from closed sales, its average and median sale prices, volume of transactions, all kinds of stuff, so that we can get an understanding of what's going on with this market. And I'm going to show you guys why we're on the precipice, like I said. So, without any further ado, let's fall into this video. Okay, so what we're looking at today is statistics that come from Florida Realtors, okay? That's the statewide association of realtors here in Florida, and this information is coming from SunStats, which is their statistic platform, so to speak. So I want to show you guys what we got. So like I said, we're looking at Miami, Fort Lauderdale, West Palm Beach. That's the metropolitan service area, the Tri-County area, as we said. And I just want to run through these stats and show you guys what's going on because it's pretty remarkable, to be honest with you. So first and foremost, closed sales, we see last year we were about 3,500. In 2022, we were at 3,500. Last year, we were about 4,500. So about 1,000 less closed sales in August. So we don't have the data yet for September because it's October 2nd when I'm filming this, but we should have that within the next week or so. But for now, we can see just between August to August, year over year, the number of closed sales was down 22.6%, right? So we see, boom, that was kind of like a holiday dip, like also November to February when people were really freaking out about interest rates starting to go up. Then let's take a look at here. We have cash sales. This is pretty interesting. So what we see here is that cash sales actually are down over the year, right? So 18.7%. This is a number I expect to change a lot in the near future because I think a lot of cash investors, they're waiting on the sidelines. They got their war chest ready. They're just waiting for sellers to start to get desperate, and they're going to start, writing some very aggressive offers, so to speak. So I expect this number to be changing in the next 6 to 9, maybe 12 months total. Now, what's interesting here, though, is that the cash sales as a percentage of closed sales is actually up. So while the number of closed sales is down, the percentage of cash sales that make up the entirety of sales is actually up 5% year over year. So not a crazy difference, but definitely, something to take note of, from 30.3% to 31.8% as of August 2022. So that's interesting. Now, median sale price up 13.1% year over year. No surprise. It's higher in Miami-Dade. It's higher than Broward too. Palm Beach County seems like they probably have a little bit less of an increase, which is bringing that average down a little bit. But still, nonetheless, from 495 to 560 in 1 year, that's a big difference, folks. Normally real estate doesn't appreciate more than, 4 to 6% in an average year. So seeing, more than double of that, more than triple of the 4%, pretty significant, right? Now, let's go to average sale price next. My screen kind of jumping around there. So average sale price actually only went up 2%. Now, this is affected by a lot of stuff. You guys can see why we never talk about average sale prices in this channel because they get so skewed by certain things. In this case, looks like probably some really low sales were bringing down the average sale price. Either that or in 2020, there was some really high sales bringing up the average sale price. But just look at the difference between median sale price and average sale price and see how wide of a spread it is. You can see, there's a lot of really high priced sales that are bringing that average up overall, right? So when you sell a $40 million property and then you sell 10 $400,000 properties, the average isn't going to be 400,000. It's going to be in the millions or whatever, right? Or I don't know what the average would be, but you get the point. So let's look at next the dollar volume. Now, this is actually pretty indicative, I think, of the slowdown in the market here. Almost a full $1 billion less year over year, 21% less in August 2022 at only $3 billion worth of volume. That means only $3 billion worth of real estate was sold in August 2022 versus $3.8 billion in 2021 when rates were still very low. Okay, so that's a direct impact, in my opinion, of the market starting to slow down considerably. Now, here's another one: median percent of original list price. Okay, so this is what this means is we put it in the context of close price to list price ratio, meaning if it sold for $100,000 and it was listed for $100,000, that's 100%. Of close price to sale price ratio, of close price to list price ratio. It's a jumble. If it sold for $97,000 and it was listed for $100,000, then that's 97% close price to list price ratio. Okay, so what we see here is that number is down 2.5% year over year. August 21, it was 100%, potentially even over 100%. I'm not sure if this graphic goes over 100%, or if the statistic rather does. But then definitely in August of 2021, we see people are starting to get deals on stuff again. 97.5%. Close price to original price ratio. Interesting. Now, median time to contract. This is actually, I thought this would be a bit bigger, but when you put it in the percentage wise, it is pretty significant. So it went from 13 days to get to contract on median to 19 days, which doesn't sound like that crazy of an amount of time. We're still in an insanely seller friendly sellers market. But that was a 46.2% increase. That's a big deal. I mean, going up 46% on any statistic is an insane amount. So next up, median time to sale. So this is basically the full length, like including the contract period. So like not just when you listed it and then went under contract, but after you went under contract until closing day. All right. So it went from 58 to 59 days. It's a 1.7% increase. Now the reason why there's not as big of a disparity there is because during this time in 2021, we were still kind of coming out of the pandemic days when sales were taking longer because like municipalities were, moving slow, some people working from home, things like that. So we've kind of gotten more efficient as a whole with our municipalities and title companies, appraisers, inspectors. Everybody's moving quicker now than they were during the pandemic. So it's not a surprise to me to see that, very small difference there. New pending sales. So these are down almost 25%, 24.8%. Pending sales went from 48.52 to 36.47. Okay, so that's a big difference, y'all. And if you didn't have an idea of how much increased interest rates are having an effect on the market before, now you do. Almost 25% less pending sales. That means houses that are under contract, right? Houses or properties, condos, whatever. You get the point. So 25% less pending sales is a very big deal year over year. I'd be willing to bet when we see these numbers in September, which I will bring you, that's going to be an even bigger number because interest rates in September went through the roof. I mean, we're over 7% interest rates for a lot of people. The most well-qualified buyers are at 7%. So that's going to continue to slow things down. Interest rates are having the intended effect that the Fed wanted them to have. So we're going to continue seeing this number get larger in the negative sense. So let's talk about new listings next. So this is an area of concern here. Basically, if we don't start to see new listings increasing, then we're not going to be seeing only downward price pressure on houses. We're going to continue to see upward price pressure at the same time, which might reduce the how pronounced this housing correction might actually be. So if you're somebody who is hoping for a very pronounced housing correction, you want to see more inventory coming on the market, because as there's less and less supply, which is what's happening now, the less supply always equals higher prices, right? It's economics 101. Now, seeing a 5.6% decrease year over year is actually not as bad as what we were seeing during the pandemic. So there is a glimmer of hope, but with interest rates continuing to rise, it doesn't incentivize sellers to sell, because if you have an interest rate on your current home that's, 2.8%, 3, 4, even 5%, selling now and then buying something that you're going to have a 7% or 7.5%, maybe even more percent interest rate is not really that appealing. You're not going to be able to get as much house for your money. So unless you're looking to downsize, it's not a very attractive opportunity for sellers, even though you're still getting close to the top of the market. You're going to have to also buy at the top of the market, and now with increased rates. So that's putting less incentive out there for sellers to put their homes on the market, right? We want more sellers to be putting their homes on the market so we can get more inventory, right? Not just so that buyers have options, but so that hopefully, we won't have that upward price pressure continuing to push up housing prices. So we'll be keeping an eye on that. Pending inventory, this is kind of similar to pending sales, except pending inventory is homes that are still under contract at the end of the month, right? So pending sales were, I'll just bring it up so you can see, number of listed properties that went under contract during the month. And then pending inventory is, number of properties that were under contract at the end of the month still, right? So this number is actually higher than the new pending sales. So less than 32.7%, which was a decrease from 7,862 in August of 2021 to 5,293 in August of 2022. So, it's a similar measure to the new pending sales, but basically what that's letting us know is that, there's actually an even greater amount of properties that are still pending, meaning that, yes, we had this 3,600 some odd properties that went under contract in August, right? But we have even more that were already under contract in July, right? That were still under contract at the end of August, including the ones that went under contract in August and still are under contract waiting to close, right? So the number of properties waiting to close is going to be greater, right? We're taking in a larger span of time. So enough of that. Active number of inventory, another way to say housing supply, right, has actually gone up 43.7%, right? So, like I said, we've started to see this new listings has started it's been less of a decrease in new listings, right? So it's not like it's been like a crazy increase, but there's been a smaller decrease in the number of new listings over the last, really over the last like 6 months or so. Now, the number of housing supply here went from 7,751 to 11,136. So that's a big increase, 43.7%. This, to me, and as well as this next metric, are what really tells me, okay, we might actually have a chance at seeing a housing correction here. Maybe not a crash, right? Because South Florida and especially Miami-Dade is very likely one of the most popular housing markets in the country, if not the world right now. So there's a lot of buyer demand, a lot of buying pressure here. But nonetheless, we've seen fewer closed sales, right? Remember up here, closed sales down 22.6%, okay? That coupled with the slightly less decrease in, new listings, right, has led to this overall inventory increase, okay? So if we start to see this number get even higher, like let's see if this gets up into like the 16,000s, now we're looking at prime time territory for a potential strong housing correction. Of how much, nobody knows. Could be 10%, could be 15, could be 20, probably not 20. But, once we get this active inventory even higher, while interest rates are still high, sellers are going to have no other choice but to start correcting for the market that we're in. Okay, so that means prices go down. Now, last one here that is very, gives me a lot of hope of a coming correction potentially. We went from 1.7 months of inventory, which again is if no new listings came on the market, how long would it take to sell the existing supply, right? So boom, we went up 64.7%. That's crazy. So it went from 1.7 months in August of 2021 to 2.8 months of inventory in 2022, meaning that it would take 2.8 months to sell everything listed on the market if nothing new came on the market, okay? So what does this tell us? What does this mean if you're a buyer? What does it mean if you're a seller, okay? Well, what this tells us overall is that the increase in interest rates is working to the Fed's plans. It's slowing down the housing market, and I believe will eventually be the main cause leading to a correction in prices. So if I'm a buyer, like I've been saying in some of my last videos, personally, I would be waiting right now. I would be making sure that I'm saving money, I'm increasing my income, I'm building up my nest egg, I'm building up my war chest if I'm an investor, and I'm getting ready to make a move, figuratively, potentially also literally, but I'm getting ready, okay? I'm preparing financially, I'm preparing my credit, I'm paying off debts, getting my DTI, my debt to income ratio as low as possible so I can qualify for more. I'm educating myself, watching Fletcher Miami Real Estate channel on YouTube religiously. I'm obliterating the like button. I'm hitting subscribe. I'm ringing the notification bell so I don't miss videos like this in the future. And I'm sharing this video with my family and friends so that they're educated as well. So, these are all the things that I'm doing to prepare in this market if I'm a buyer. And then last but not least, if I'm a buyer, I'm actually going into the description down below, finding my contact info and reaching out so that I can help you guys out. Now, what does this mean if you're a seller? Well, if you're a seller, I'm pretty much doing a lot of the same stuff as the buyer in terms of smashing the like button and so on, especially, reaching out to me at the contact info in the description down below. But I'm also, in addition to educating myself about when it's time to buy after I sell, I'm educating myself about how do you sell in a down market? What are some things that you need to do? One of the most important things to do is to price ahead of the curve. What does that mean? Okay, let me make an illustration for you here. If prices are at 400,000 and the market's going down and pretty soon they're going to be at 350 and you price your house at 400, right? Well, other houses sell, and by the time, people get around to looking at your house and making offers, now it's kind of worth like 395, right? So, by pricing at the market, buyers right now, it's amazing to me. They think the market has already crashed, even though it hasn't. But when a buyer thinks, hey, the market's already crashed, they don't want to pay list price. They don't want to pay 400,000. They want to pay 375, but you didn't accept that offer, right? So you're chasing the market down, right? Until finally it's worth 350 and maybe you get 350 for it, maybe you don't, right? Maybe you get sick of it, you cancel the listing, etc. So you want to make sure that you price ahead of the market, meaning if your house is actually worth 400,000, like an appraiser would say it's worth 400,000, or an expert real estate agent such as myself would say it's worth 400,000, then you want to probably price your house more at like 395. That way, you can maybe whip up a little bidding war, fingers crossed. You can't ever promise those kind of things, but you hope for them. But you want to price a little bit below the market. Some people say 10%. I think that's maybe a little aggressive. If it was worth 400, I probably wouldn't price my house at definitely wouldn't price it at 360, but I would price it a little bit below, like maybe not 1%, but like, maybe 1 or 2%, like go ahead and price it at 392, 395, something around there to make people feel like, hey, we're getting a deal, right? So that's what you want to do if you're a seller, in addition to working with a expert agent and making sure you have all the P's and Q's and T's crossed and I's dotted and all those things. You want to make sure that your house shows well. You want to make sure that you give plenty of time for people to get in there and see the house. And you want to have expert professional marketing that highlights your house in the best possible way. That's what I do. if you're in the Miami-Dade area and you need help with that, like I said, reach out to me at the contact info down below. I'd be happy to help. And that's about it for this video, guys. You know, these statistics are very clear to me that we are in the very, very beginning stages of a serious market correction, and it's up to you to stay informed, educate yourself, and prepare for how you can best capitalize on it, because the most amount of millionaires are made during recessions. So as much as people like to get scared, and maybe not like to get scared, but as much as people do get scared during a recession and so on and so forth, it's actually kind of an exciting time for people who are prepared and willing to grab the bull by the horns and turn, you know, heartbreak and tragedy into a opportunity. So those are my little words of wisdom, you know, a little Tony Robbins motivation style for you there. And I hope you guys get a lot of value out of this video. If you did, you know, like button's right there for you, share button's right there for you, and I'll catch you on the next one. And until then, hope you keep on winning. Peace.